Welcome back to Stocklabs for another market recap. We are halfway through the month of March. Winter's coming to an end. St. Patty's Day we just had on Friday, so hopefully everybody enjoyed the celebrations and the weekend and is enjoying a lucky first quarter so far. The market did pretty well this week. We were looking for kind of like a little bit of a follow through low to get put in based on the prior week. Monday opened kind of down, but then the rest of the week we spent mostly moving higher, especially in the NASDAQ. Some of the other indices, S&P and Dow, and these ones are still being kind of weighed down by the ongoing banking crisis or whatever, but the Qs are somewhat immune from that, or investors are treating them as a safe haven because they don't have this type of, they're not heavy in these types of sectors. So Qs were up 5.7%. Gold had a nice week, up 5.7, basically matched the Nasdaq. Kind of a rare scenario where gold is keeping pace with the Nasdaq. Bonds had an okay week, up 1.3%. S&P was up 1, so it managed gains on the week. And the Dow was down 0.5%, and IWM was down 2.7%. Never really got going. A lot of the banking turmoil has been concentrated in the regional banks, and a lot of them are in this IWM sector, or in this IWM index. So the index wasn't going anywhere. I mean, people just abandoned it, in favor of NASDAQ this week. So that's kind of how the overall market picture looked. Oil got clobbered down 12%, and not sure if it was anything specific. I think the OPEC was out on the news wires saying it was, it's finally the hot money bailing on crude and all this stuff. I mean, OPEC kind of just says whatever all the time, depending on how they want to either complain about the price action or whatever. So, I mean, they're not happy that crude is collapsing. They're blaming the speculators, kind of a typical thing. You see that all over the place, not just OPEC doing that sort of thing. But anyway, good week for the Qs overall. The mega cap leaders that we have here, with the Qs up 5-6%. Yeah, they did pretty well. So Google was top performer, up 12%. Microsoft also up 12%. Nvidia up 12%. Amazon bounced back week, up 9%. Meta up 9%. And okay, the rest kind of underperformed the Nasdaq, but they were green. So Apple was up 4.5%. Tesla up 4%, almost 4%. And Netflix up 3.5%. So really solid week from this group. You could see the money is just flowing into them. Google has nothing to do with bank defaults or regional bank collapses or anything. People, if they want to put money into the stock market, but they can't do it in certain sectors, at the end of the day, it all ends up coming to sort of these gigantic tech companies. So you can see that, Google, Microsoft, Nvidia, big winners this week on the backs of the regional bank collapses. Okay, so let's look at industries for our breadth metrics. Actually, for such a quote unquote strong week, I mean, the S&P was up 1%, Nasdaq was up almost 6%. Breadth overall was not good. I mean, utilities were green, but everything else on a median basis, the median stock in the market was down this week. So you kind of are seeing that there's an underlying weakness to the market, even if the indices, even if the major indices manage to pull out some gains for the week. Overall, there's still sort of looks like distribution in the market on individual stock levels. So we had tech down, median tech stock was down 1%. That is a far cry from the 5-6% gains that the Qs had. So, tech overall was also weak. The only thing that propped up the NASDAQ was those gigantic tech companies that take fund flows when people are trying to hide out. When people are trying to hide out away from the actual economically sensitive sectors that are collapsing. Services down 3.7, industrials down 3.5, basic materials hit hard, down 7. We saw crude was down 12% itself. Basic materials down 7. Consumer down 3, financials down 2, healthcare basically flat, down 0.5%, just a little bit better than tech. As far as subsectors go, yeah, we said gold had kept up with the NASDAQ as far as performance. Gold, the commodity, the raw commodity, kept up with the NASDAQ. Gold, miners and all of these guys, they bounced hard. They were along for the ride for a change. Sometimes you see gold trade up or down, and the miners kind of ignore what's going on in the commodity that they deal in. So silver also tagged along, up 9%. I'm sure this is getting the silver people excited again, talking about, $50, $60 silver ramps that, when you get these periods of turmoil, especially when there's systemic risks getting exposed. The metals, they do well. They do pretty well. Nothing else was really okay. We've got this random bio sector up 5%, but nothing else was up 5%. Even within the NASDAQ, like we said, the median tech stock was down, but within the NASDAQ, you don't even see any kind of okay, there's a couple of semiconductor. I see semiconductor up here up, 1.5, couple other semis up 3, but, nothing really leading the charge for the NASDAQ other than those mega capped holdings. The downside was pretty full of all kinds of stuff. So we've got oil and gas sectors on here. Solar, continues to fall apart. Solar was really hot trade for a long time, but probably it has something to do with crude collapsing, because as the price of crude backs off and traditional energy costs drop, it makes solar kind of less appealing. Unless there's a edict or a command like we have to get half our stuff from solar. Electricity producers, energy producers, they are going to gravitate towards the cheaper options. So you see natural gas has collapsed, crude is collapsing. These are all input costs to basically electricity and things like that. So you're not needing to pursue these sort of solar alternatives if the prices of those things are coming back down to cheaper levels. I'm guessing that's why solar has been so weak alongside the crude move. We've got regional airlines down bad. Where are the regional banks? I don't see the regional banks on the worst performers, and they were kind of the ones at the center. Okay, here's some stuff. Regional Pacific banks, regional Southeast banks, money center banks, regional Mid-Atlantic banks. Yeah, they're all down 7, 8, 9% ish range. Savings and loans down. Got 25. Got 52 sectors down 5%. That is pretty weak, especially following. I think the week prior, if I remember correctly, it was something like 155 subsectors were down 5%, and we're kind of following it up with another week of 50 plus sectors down. So this whole last couple of weeks has been more or less liquidation, even though in this most recent week, the NASDAQ caught a nice bounce and the S&P closed green. Under the surface, there's just a lot of carnage, basically. I don't think you're really seeing you're not really seeing like a new uptrend forming here. It's kind of just choppy indices while individual stock exposure is just slashed. So we'll see how that plays out in the coming weeks. For breadth on a market cap basis, got 1 to 5 billion, down 2.12%, 5 to 10 billion, also down 2.12%, the exact same. Let me just double check. Yeah, it's funny that 1 to 5 billion, 5 to 10 billion, both down exactly 2.12%. 10 to 50 billion, down 1.24%. 50 to 100 billion, down 0.25%, and 100 billion plus up 0.5%. So not too bad. I mean, like we said, this was really concentrated in the tech space. If I add the sector, it's all tech. So the top performers, we've got one. Okay, Amazon is technically services, but we're going to call it tech because the AWS is the only reason anybody buys Amazon anymore. And what do we have? Eli Lilly was the only one in the top on the first page here, healthcare. So everything else, tech is leading. If we look at intelligence for this coming week, okay, it looks a little bit light. I mean, you're not seeing like a whole list of things on here. Got short Dow is bullish, so bearish Dow. Got high beta bear ETF is bullish, so high beta, this generally will follow more of like the IWM type stocks. The regional banks are going to be actively traded this week, obviously. Again, even material stocks, things like that, all fall under high beta. So they're all bearish this week. And oil and gas, oil and gas produces bullish. So yeah, we said crude had a bad week. The material stocks as it related to oil and gas had a bad week. So Stocklabs kind of looking for a bounce out of them. And on the downside, got a little bit more stuff. MSOS, I think this on my stocks. This is just leverage of the MSOS ETF, MSOX. I forget what this is, but it's going to be the worst performer this week per Stocklabs. And then we've got biotech bearish, robotics bearish, bear Tesla is bearish, so bullish Tesla. I mean, you're seeing how this is kind of sticking with the theme. A lot of the market is going to struggle, but the mega cap tech type stuff, should be, might be okay. We've got Boyle bearish. Okay, so natural gas has been a downtrend for months. Stocklabs looking for continuation of that. Dow Jones Internet bear ETF is bearish, so bullish Dow Jones Internet stocks. I don't know what is included in that, but you can look it up. Ultra silver is bearish, so maybe silver backs off. Precious materials in general back off from the big ramp they had. And what is this? Tech multimedia network something. I don't know what this is. EM bearish. Bull ETF on the bear screen is bearish, and ultra short biotech is bearish, so bullish bio. Okay, we got biotech. Got two different signals on here. So Labu is bearish, but the short ETF is also bearish. So maybe not much of a conclusion to draw there. Overall, I think you know, you're having a lot of turmoil in the market with the banking sector. Everyone's on watch for contagion. So the SVB situation is still being resolved. We had Credit Suisse basically collapse over the weekend. They're working on a deal for someone to buy it, maybe UBS, or we'll have to see how that goes. But you know, it's not just going to be. Everyone thought it was Silicon Valley Bank they patched it up, that's it, and now you're having another bank collapse. So the regional banks are really going to be under pressure this week, I think, and some of them will actually go under as well. So it's not like this isn't some kind of situation where things get patched up overnight. Generally, there's kind of chain reactions that come um, before a final resolution takes place. So all that being said, I think you're in for kind of a soft week in the market, maybe a bit choppy. Uh, We'll see if people want to continue pushing the NASDAQ, but I'm thinking in general, if the risk is off, eventually, everything sells. So we have the Fed meeting coming up. Probably people are expecting a pivot once again, just because of all of the banking sort of turmoil. But remember, I said a couple weeks ago, the Fed is going to try to push back on this idea that they're pivoting or anything like that. I mean, CPI is still printing like 6% or something like that. So they really don't have a lot of room to just say, oh, okay, we're going to, we'll just cut all the rates. Everyone can go back to having fun, because if CPI takes off again, it's basically the game is over. Kind of, they're gonna have no choice. The rates are gonna have to go to like 7, 8, 9, 10%, whatever it takes to actually break inflation, because so far it's only sort of come off slightly. It hasn't really reverted back to 2% or anything close to that. So I think you're going to see the Fed try to use some language that, quote unquote, talks tough a little bit, even though the market probably won't believe them anyway. The market's probably just going to shrug them off. I mean, they kind of know that the Fed is going to, push comes to shove, the Fed supports the market. Doesn't, it's not going to care about inflation, and then we will just wait for inflation to ramp again, and then everyone will panic all over again. So we'll see how it goes on this particular week, but I'm expecting some language from the Fed that says something along the lines of them sticking to their guns a little bit. They provided some assistance, in a time, in these last couple weeks time of need, but they're, don't bank on it going forward, something along those lines. I mean, Jerome Powell could be on the hot seat going forward. I mean, he's kind of presided over a lot of nonsense the last 3, 4, 5 years. Maybe he's done with it all too. He doesn't like. Maybe he wants out, but um, yeah, I think if you see some more bank failures and things like that, people are going to be calling for his job pretty soon. So, but that'll be something for another day. For this week, I think mostly going to be a choppy week. Fed's on Wednesday, so Monday, Tuesday are going to be dead days, and then after the Fed, we'll see which direction and traders pick. But most likely, I think you're going to see something weak. Okay, that's all from me. Be back next week to see how it all went, and yeah, good luck out there. Hope you're having fun, and hope your bank accounts are not in collapsed banks. Talk to you later.